Hi everyone. Hope everyone is looking forward to the weekend. Now, before I do the usual and switch over to my screen share and walk you through a lot of the charts, and of course the ideas that I have prepared for the forthcoming week, I'm being asked a lot at the moment what's happening going into December. Now, I have a few charts prepared. And of course, I'll try to give you as much technical insight to the market as I possibly can. And for those of you that have followed the channel for a while, you'll know that my time horizon is weeks to months. I am not a day trader. If you are in this for little 50 cent, $1 moves, then this analysis probably isn't going to be for you. We like to be in a trend for weeks to months, and quite often times that means $20, $50, $100 moves, because that's where the bulk of capital returns come in. So hopefully you get some insight from this. As always, if you do like the video, please like it, share it, subscribe. Bottom right hand corner of your screen, you should see a little pop up for subscribe. But let's dive into the charts. Let's see what the market's telling us. And like I said, hopefully you get some ideas for the forthcoming week. Now, before I get into the charts, please do pause the video, make sure you're comfortable with that. It basically says that it's not any investment advice, do your own due diligence, and it would be very, very silly of you to act on any of these charts blindly. To give myself a little bit of credibility, I'm registered with the CMT Association. Technical analysis is something that I'm widely known for, and I'm working my way to my chartered status. Now, 2 weeks ago, we provided these charts in our last social media analysis, and I just wanted to highlight the 2 week performance of those charts. Again, for those of you that I guess scroll around social media looking for the best content, I think that probably speaks for itself at this point. But I am going to be going through another 20 odd charts, individual stocks this week as well. It will be the only upload that we have for December. As most of you know, I'm way too busy now. I can only upload around once a month. And if you get value from this, again, please do subscribe to the channel. Now, to dive into the charts, now what I wanted to start off with is September, June and February seasonality. The reason why that's important is, as we can see over the last 70 years, we can see that the S&P 500 has underperformed the market for 3 months. Now, that's clearly what we've seen this year. So the seasonality for this year has held true. The reason that's important is I'm asking myself, coming into the end of the year, well, what are we likely to see in December? Well, as we can see, over the last 70 years, December has been a top performing month. So if seasonality is going to hold true, as it has done this year, it would make a lot of sense to me that with the S&P 500 breaking out to new all-time highs, which is not the characteristic of a downtrend, it is not a bearish signal, it's a bullish signal. We have the Dow is breaking out. We're above a key psychological level in the market. I'm sure most of us already know that the small caps have been utterly incredible over the last couple of months. Again, I do have a chart for the small caps as well. We've got technology looking like it's about to break out. Hopefully we see some participation from the mega caps. But one of the charts that I think is often underlooked is the US dollar index and why it's so important to what's happening with the overall market. As I'm sure most of you know, because I have talked about this chart over the last few months whenever we do our uploads, is we can see that the inverse correlation between the US dollar index and the S&P 500. Now, what that's essentially saying is that when the US dollar is dropping, the S&P 500 is rising. Now, we started to fall off a cliff again in the US dollar a couple of weeks ago, and as we can see, the S&P has been rallying on the back of that. So it's not any surprise to me that when we factor in all this information, where we have the US dollar, where we have the major indices breaking out to new all-time highs. We've got the small caps relative to technology. Now, what this chart is essentially saying is a couple of months ago, small caps were the place to be. We can see this is what's called a relative chart. We reached the August 2000 lows. That's the signal for us to then say, okay, we know that the small caps are going to find support relative to the triple Qs. So therefore, we would want to be investing in small caps and not technology names. That is where it's going to drive the outperformance. And again, you could go back over previous uploads. I've talked about this chart for the last couple of months, and again, it does seem to be holding true at the moment. We're also seeing a tail off again in volatility. Again, the inverse correlation. When volatility is spiking, we know that the market is likely to be going down, and when volatility is dropping, we know the market is likely to be going up. So when we put all this information together, I am super bullish on the market at the moment. Does that mean that we cannot see failed breakouts and I could change my thesis by the end of next week? Of course, I'm open to all possibilities. But what the data is essentially telling us at the moment is we should be bullish and not bearish. We've got software names looking like they want to start to break out of a base. We've got technology, communications, services, and these are the names aligned with that. Again, these are breaking out. So that's not a bearish move for technology. Emerging markets, again, we've been breaking out in emerging markets. I do have an eye on potential resistance here dating back to January 2018, but we have broken out, in my opinion, on a relative basis and an absolute basis here, but we do need to clear this next hurdle with emerging markets. And again, for those of you that pay attention perhaps to the news and all the sensational headlines about China and delisting, etc., this is why charts are really important, because it filters out the news, because there's always a narrative that seems to be playing out with especially financial media, but what is actually going on under the surface? And what is going on under the surface is the stocks aligned with China, with Taiwan, Korea, they're all being bought, they're not being sold. So I would highly encourage you to pay attention to charts and not what the headlines are telling you, because quite often there's a narrative with the financial media that doesn't necessarily suit their agenda. So we've got solar. Lots of questions on this last week. Why has solar started to decline a little bit? Well, we can see solar relative to the S&P 500 simply is just meeting a little bit of resistance. So that just means that solar, we've had a little bit of a decline. It doesn't mean you need to go running for the hills. It just means that you just need to be a little bit more patient with the individual solar names. We've got the gaming sector looking like it's breaking out on a relative basis and an absolute basis as well. So again, if those sectors aren't part of your radar, I would highly encourage you to start doing some due diligence on the individual names. Now, that's the overall market talked about for the last 5 minutes. As I said, I am going to get into around 20 individual charts now that hopefully provide some value. I'll do my best to explain my thesis and why I'm arriving at a conclusion that I am. But most of the time, as someone who relies on price action, I'm not someone that's looking for all these little crossovers on minute time frames. I'll leave that to all the day trading gurus out there. I'm sure you know who they are. But what I'm looking at here with Datadog is we have broken out, in my opinion, above a descending trend line. Now, I pay attention to these psychological round numbers. I think they're important, and we've broken out above $100. Now, the other thing that's quite important for my process is that with Datadog, we did not reach oversold conditions. The reason that that's important is because when stocks reach oversold conditions, that's generally the characteristic of a stock that's trending lower. Lots of you will have learned the trick that you buy stocks when they're oversold and you sell them when they're overbought. That is not, in my opinion, the correct way to use RSI, especially if you want to be in the trend for as long as possible, because when stocks reach overbought conditions, those are characteristics of an uptrend. And yes, you'll have to deal with little pullbacks here and there, but if you want to accumulate the big returns, you need to be staying in these trends for as long as possible. So, contrary to what every other guru will be telling you out there, I use RSI completely differently. And clearly we've had a bounce here, a logical level, and we've rallied, and I think above $100 makes a lot of sense there. Now, I got a lot of attention a couple of weeks ago with this chart for Alibaba, and I'm providing an update to this chart. Again, I made a bullish call on Alibaba a couple of weeks ago in my last analysis here, when price pulled back. Again, I'm using RSI as a logical turning point. Now, that thesis absolutely held true. What's happened since then? We've pulled back, but we've made a higher low. Again, that's something we want to see. So when we do pull back, you want the pullback to be higher than the previous low. That gives us more confidence that Alibaba is going to continue to rally higher. That's a characteristic of an uptrend. Now, we've got Salesforce. Now, the other thing to say is if there are any disclosures that I need to make regarding existing positions or any positions that I have recommended to clients over the last week, then I will do so. Now, Salesforce pulled back, acquisition of Slack. Again, it's no surprise to me here. I think all we've seen here is a very, very logical gap fill. And the expectation is if the Dow is breaking out, with Salesforce now being a component of the Dow, then you would expect Salesforce to move higher from here. However, that said, we always have to ask, what if we're wrong? And I think if we break below this level here, then that would be a signal to me to say, Sam, your thesis is wrong. Let's not take any chances and let's not hold onto the position blindly. We've got Roku. Now, I made a bullish call on this a couple of weeks ago. The thesis has been playing out. We have a logical upside target here of around 370. Now, I think what I would say at the moment, it is looking like it's a little bit overextended, potentially see a little bit of a pullback, but in my opinion, provided the key technical levels in the market are holding firm, I think you can buy any weakness in Roku. Bloom Energy, I think what we're potentially looking at here is a high and tight flag, and I think a breakout here, I think if it moves above 28.50, then that might well be a consideration for you. I think we've had a breakout in Uber, very, very logical level here, and I think we have an upside target here for Uber at around $65. Now, I am using Fibonacci. It's amazing to me how many times Fibonacci is respected on any given chart, and I think for this chart, I think the tool has a lot of merit. That's one of the areas that I think many fail with technical analysis, especially when I look around. I certainly see all the day trading gurus out there promoting all their nonsense. Technical analysis is a tool like anything else. I think every single chart has a different take. You cannot use the same analysis or the same tools for every single chart. You need to apply what works. Sometimes Fibonacci works, sometimes it's moving averages, sometimes it's the ATR. It really depends, and it's about taking the time to figure out what works. Now, Square Inc, we like it above $200. My thesis on this has not changed. I think with the iPay ETF looking like it's breaking out, I think it's only a matter of time before Square Inc starts to move. Update to the chart from a couple of weeks ago. This was one of the charts I highlighted a breakout in Kirkland's. I also posted this to social media during the week as well. It's had a monster move this week. Long may it continue. But again, we've had a little bit of a pullback. Now, some of you will understand the term buy the dip. I phrase it a little differently. I like to say that pullbacks and uptrends oftentimes offer opportunity. So I think that certainly, provided we have these levels of support holding true, we know that with a lot of breakouts, they like to come back and retest. Hopefully that doesn't happen. Hopefully this one just starts to fly off to the moon. Now, disclosure, I hold a position in Plug Power. This has been talked about. There's been alerts sent out to our clients and members on this. Again, we highlighted this actually on Wednesday in our halftime report. Pullback, logical level of support, and we've started to rally off this level here. So again, as I talked about before, pullbacks and uptrends offer opportunity, especially when we're talking about compounding, and if you like to add to winning positions. We've got excellent relative strength to the overall market. So I think Plug Power looks very, very interesting here. Again, this is an alert that we sent out to our members and clients at $14. I hold a significant position in this at the moment. I do have it on watch, however. There is a potential that I may exit my position on this on Monday, perhaps Tuesday, if we do not rally from here. Again, I have my process. I'm defining my risk. I'm doing very, very well on the stock, and sometimes price just tells us to get out of town. So that could be on the cards with CLDX. Personalis, disclosure, this is a chart that was shared with our clients this weekend. We like it above 32.50. Chewy has earnings coming up next week, so I do not advocate buying stocks coming into earnings unless you're playing options, lottos. I know there's probably many of you that like to do so. But provided I think we're above $72, I think you can be bullish. But I always like to have rules in place coming into earnings. I don't like to go into earnings with anything less than 10% profit on price, because I'm sure many of you understand already that oftentimes when we have an earnings report, we can see them absolutely crush the numbers. Everything's super bullish, but for whatever reason, Wall Street decides to take the stock down, and everybody's asking why this is happening. I think something to understand is, the Wall Street can do what Wall Street likes to do, and if they want to take you out your position, they can do so. So that's why it's very, very important to have rules in place going into earnings. I like to have a minimum of 10% profit in place. We've got Yeti, I think above $63 makes a lot of sense there. Peloton, disclosure, I own a position in Peloton at the moment. I think we're building the right side of a potential base here. We know that with bases, they like to break out. So that's what I'm hoping here. So yeah, we'll see what happens with Peloton. I am waiting for a breakout on a relative basis as well. Again, that would just give me more confidence that Peloton is going to rally and go back and test these highs. We've got Snapchat. We have broken out here, I think. I did share this chart a couple of weeks ago, and it does look like it's starting to move. Again, we're using Fibonacci levels, and we like it above $45. Fiverr, again, using these Fibonacci levels, 12th century mathematics, and logical target here of around 316, provided we can get a bit of continuation here on a technology name. Now, I was asked to provide an update to Crispr this week, as it was one that I covered a couple of weeks ago. It's obviously had a monster breakout and monster move. Biotechs, if you've not been looking at Biotechs, they've been absolutely ripping over the last couple of weeks. But I think you do need to pay attention with Crispr here. It may stall here a little bit. It does look to be a bit overextended when we look at RSI. Does that mean it's a bad company that if you do decide to sell it? No, of course not. It's a great company to own. But the technical side of things, which is the way that I play the market, I think we're approaching a logical target there for Crispr. ENPH, again, had a poor week this week like solar has, as I highlighted at the start of this analysis. It has pulled back to a logical level here, so I would like to see it rally here off the 20 period simple moving average. It's not a bad thing when stocks pull back and find support at the 20 period simple moving average, because that's a characteristic of a decent uptrend. We've got Nvidia, we like it above 590. There's still a few more percent to go, but with semiconductors starting to rally and rip higher, I would suspect it's only a matter of time before Nvidia starts to do so. I get a lot of questions on Amazon. Why aren't the mega caps moving? And I think something to highlight here, and again, I wanted to highlight the 12th century mathematics and how it applies to this chart, and we're talking about Fibonacci here. You have to understand that the mega caps and something like Amazon is very, very capable of doing a whole lot of nothing for long periods of time. Now, this has been my chart for the last couple of months on Amazon. I think we're just chopping about sideways here in this very tight range, and I think what it's going to take, just like what it took here when we had this monster rip higher, I think we're waiting for a breakout here on a relative basis. So I'm waiting on another breakout here, which I think will then start to give Amazon a little bit of momentum and hopefully start to get a bit of participation in the rally that we've seen. Because I think at this moment in time, I think most of you holding Amazon are probably a little bit frustrated at what's going on. And when we look at the chart, it's just chopping about sideways, doing a whole lot of nothing. There have been other areas of the market that have been better investments at this moment in time. Over the long term, clearly Amazon's beautiful. But I think it's just about waiting, I think, for that breakout. Disclosure, I think probably most of us own Apple, don't we? I think we're building a bit of a base here. Again, whole lot of nothing. It's been chopping about sideways. But there will be participation at some point from these mega names. But again, we're building, in my opinion, the right side of a base, and I've got a target here of around 140. And if we break out above that, then I think Apple is probably going to rip. Nuance Communications. Again, I've been asked for an update on this. I did call this a couple of weeks ago. Again, I think we're potentially building a bit of a flag pattern here. So I think if you were to set a price alert there for around 44.50, I think that would be a signal there that Nuance Communications is about to start moving higher. You just need to look at the chart. I mean, that's a thing of beauty at this point. So again, long may the trend continue there. Netflix. Again, I think we're chopping about sideways in a range. I don't think it's offering any kind of risk to reward proposition at the moment. I did call this a couple of weeks ago off the bottom, and it has started to move higher. But ultimately, I think at the moment, Netflix is in a massive sideways consolidation, like a lot of the mega cap tech. But I think we've got an upside objective here of around 575. Pinterest, massive trend rally. Many of our clients and members are already in this one. Again, we've got an upper target here of around 83. Nike, we're bullish above 131. We have an upside target there of around 175. Again, we're using trailing stop losses to help us with the management of any positions. MGM had a massive move recently. Again, we called this a couple of weeks ago in our last analysis. Again, what we should be doing now is just managing the position with a trailing stop loss, and eventually you will be triggered out of the trade. Again, been asked about Moderna, as I called this a couple of weeks ago. Massive move. I had a 75% rip. But when we get these massive rallies, it stands to reason that you will have a pullback at some point. That's exactly what we've seen. But again, it's not any coincidence that we pull back to these Fibonacci levels. So again, I would fully expect Moderna now to go back and retest these highs and hopefully break out again. Teladoc, We like it above $200. We've broke out above that level now this week. Again, we've actually got a target there, despite what this chart looks like. This is actually a 50% move if it moves towards the next level, and this is also a weekly chart. That's something else to point out. Riot blockchain. I think there's a lot to be said here for, especially all you guys out there that have been holding here from $4. It could absolutely break out again. Totally, it could break out. But there's a $10 barrier here. If we break out above $10, then this thing, in my opinion, is going to rip again. So hopefully those of you that are in there have been doing very, very well. Again, disclosure, this is a chart that was shared with our members and clients when we broke out here and here. So again, Riot blockchain, if it breaks above $10, I think it has the potential to rip even more. And we also have Focus Financial Partners. Again, we've broken out above a very key level. This is a base dating back to March 2019. So excuse me, and I think we've broken out here, and I think we can be bullish provided this level holds true, and certainly we'll see what happens with that. Now, for those of you that maybe struggle a little bit, or maybe don't have an understanding of technical analysis, feel free to stick around for a minute or two. But if you have got some value from that, please do subscribe to our channel. Give the video a thumbs up. It all helps with the YouTube algorithm, and it would be very, very much appreciated. And like I said, hopefully you found some sort of value or learned something that will help you, I guess, moving forward. But if you are somebody that does struggle a little bit, feel free to go and check out our website at honeystocks.com. We provide technical charting services. For those of you that maybe don't know, we provide our premium weekend analysis, similar to what you've just watched. We provide it every single weekend to our clients and members. We provide a midweek halftime analysis. We also provide trade ideas, which I'll show you what that looks like in just a second. With your membership, we also provide you access to a network of traders and investors. Again, it's an incredible place. We've got charting support. If you need a second opinion on a chart, then I'm on hand day in, day out to provide support and provide my chart if requested. And we also provide this completely free. If you're somebody that would like to learn technical analysis and would like to add structure, would like to build a rule set, we provide full access to our technical analysis program with our membership. If it's something that's interesting, all you need to do is just click join membership here and fill out your details. But this is what our trade alerts look like. This is a recent alert that went out for plug power above 1450, which has been a massive winner. There's the alert that we sent out there for Celdex Therapeutics above $14. Peloton, we called this one on a breakout above $100. Again, it's not any coincidence that we have these 12th century mathematics levels. There's a massive mover there that we had with Nvidia Corp and VSLR, which was another winner as well. But I'm very, very unique in what I do. I open up my work for complete transparency. Every single trade alert that I have ever sent out to our members over the last 3 years is fully published on our website. So feel free to go and check if the types of stocks that we select are the types of stocks that you like to buy. We're not into penny stocks. We're not day trading. But if you're somebody that I guess perhaps likes to buy the CrowdStrikes, the United States Steel, which is another massive winner recently, absolutely feel free to go and check that out. But again, just to show you the diversity of the group, we have many members that trade options. We have many members that, like me, just buy the underlying. There's Jeff up 874% on his calls. But to the other end of that, we've also got Jamie, who's now made it to, well, he's actually up at 105,000 now. And he started off with 40,000. That was just a year ago. Again, massive win here. Recent alert that went out for United States Steel, 760% on his options there for Andrew. Again, this is a typical interaction that I have with our members. I have a platform, I have an app, and it works very well. I don't send out alerts on text message or WhatsApp or any of that nonsense. I've got a very professional setup, and it's full of very well educated professional individuals as well, which I absolutely love. Again, massive move here from one of our members, up 103%, 77%, 65%. I've got a very high membership retention rate, and yeah, so if you're looking to perhaps get away from day trading, if you're looking to learn technical analysis, or maybe you're just too busy to filter through thousands of stocks because you work, you've got your family, your business, etc., we might be the right place for you. But I'll leave you to go and do your own due diligence. And yeah, it's only $500 annually. So if you've stuck around to the end, thank you very much for watching. And just to finish off, give the video a thumbs up. Thanks again.